This is your LMAX Exchange technical update for Friday, September 29, 2017. Euro dollar. So looking at the Euro weekly chart, it looks like the market is ready to top out a little bit in 2017 following an intense rally to the top side to plus 2.5-year highs. The market also took out some significant multi-month resistance several weeks back, which does warn of medium to longer term upside ahead. However, this rolling over that we're seeing now potentially suggests that the market could trade all the way back down into the 112 to 115 area before considering a higher low and resumption of this intense uptrend in 2017. Sterling dollar. So cable has seen a pullback off its recent 2017 high, but it's clear that this is a market that is putting in a longer term bottom after basing out in 2016 and breaking out in 2017 above what had been a range high in the 127.75 area. At this point, any setbacks that we see in cable over the coming weeks should be very well supported ahead of 128, with the market looking to put in that next major higher low ahead of a bullish resumption back above the recent highs up in the 136s and towards the 140 to 145 area further up. Dollar yen. Looking at the dollar yen weekly chart, the market has been mostly chopping around in 2017, coming up into some resistance in the 114 to 115 area, but being very well supported on dips down around the 107 to 108 area. And so the range is expected to continue with any rally seen well capped in favor of what could be a more significant pullback towards the range lows over the coming days and weeks. Aussie dollar. Looking at the Aussie chart on a weekly basis, the market is considering the possibility of topping out off a plus 2-year high, and there is risk now if the market establishes below 78 for a more significant pullback over the coming days and weeks that takes the market down towards the 74 to 75 area. Any rallies from here should be very well capped ahead of 80, with only a close back above 80 to suggest that the market isn't ready to give up just yet and could be poised for a more significant run to the top side. Dollar CAD. Dollar CAD has since shown signs of basing out in 2017 after dropping to a plus 2-year low down around 120. The weekly chart is showing this materialization of a correction, and there is risk over the coming days and weeks for the market to push back up through resistance at 127.80 and towards the 130 to 133 area before considering the possibility of resuming a more significant downtrend in 2017. But for now, there are signs of the market putting in a base, and the market should be looking to test resistance up towards the 127.80 to 130 area over the coming days. Kiwi dollar. The weekly chart has been showing the market very resistant to trading higher after topping out by above 75 at plus 2-year highs, and there is signs that the market is looking to roll over again. And if we see a breakdown below recent support, which comes in around the 71.30 area, it could expose a drop all the way back down towards this 2017 low in the 68s. Any rallies for the time being should be very well capped, while only a break and close back above 74 here would put the pressure back on the top side. Gold. So gold has been showing a little bit of weakness over the past several sessions, and the weekly chart is showing the potential for setbacks to extend a little bit more, but not much more, as this market continues to be very well supported on dips, and a higher low is ideally sought out above 1250 now in favor of the next upside extension back above the recent 2017 peak, which comes in around 1357 and towards and potentially through the 2016 high at 1375 further up. Only back below 1200 here would compromise the constructive outlook for gold.